Welcome to the very first episode of TradeMindGames. I'm Nathaniel Ledger, and we're about to embark on an incredible journey into the intersection of trading psychology and market behavior.
And I'm Elliot Cortex. Fair warning, listeners. My brother's about to blow your mind with some serious neuroscience. But stick with us because this could transform your trading.
Each week on TradeMindGames, we'll be taking deep dives into groundbreaking research, iconic trading books, and peer-reviewed studies that reveal how psychology shapes market behavior.
But don't worry, we're not here just for theory. Everything we discuss gets broken down into actionable strategies you can apply to your trading immediately.
Every episode, we'll be dissecting a different trading psychology book or research paper, extracting the key insights and showing you exactly how to apply them to your trading.
Think of it as your weekly dose of trading psychology, backed by science and battle-tested in real markets.
For our premiere episode, we're diving into a book that revolutionized how we think about trading psychology, Denise Shull's Market Mind Games.
Perfect choice, especially since it challenges the biggest myth in trading, that emotions are your enemy.
Shull's background is fascinating. She combines neuroscience research with real trading floor experience. She discovered that our emotional responses to markets are actually sophisticated prediction systems.
Wait, you're telling me all those gut feelings I get before a market move aren't just random anxiety?
Exactly. Shull's research shows that our emotional brain processes market patterns faster than our conscious mind can articulate them. She calls this context cognition.
Give me an example. How does this work in real trading?
Think about the last time you had a strong feeling about a trade but couldn't explain why. Shull argues that your brain was pattern matching with every similar market situation you'd ever experienced.
Like last month when I felt something was off about those momentum stocks but couldn't put my finger on why?
Perfect example. Your emotional brain was processing subtle changes in market behavior before your conscious mind could identify them.
And 3 days later, those stocks crashed. But how do we know when these feelings are reliable versus when they're just fear or greed?
This is where Shull's framework becomes practical. She introduces what she calls the risk framework, a way to integrate emotional data with traditional analysis.
Break this down for our viewers. How do we actually implement this?
Shull outlines 3 key components. First, you need to start tracking your emotional state before entering trades. Not just good or bad, but specific feelings.
Like that knot in your stomach before a big position?
Exactly. Second, you track your emotional responses during the trade, especially at key decision points.
And let me guess, the third part is analyzing how you feel after the trade?
Yes, but Shull takes it deeper. She shows how our post-trade emotions often contain crucial information about our decision-making patterns.
This reminds me of that oil futures trade I made last year. I ignored that uneasy feeling and paid the price.
Perfect case study. Walk us through what happened with that trade.
I had all the technical signals lined up, fundamentals looked good, but something felt off about the market's reaction to the inventory data.
And this is exactly what Shull means when she talks about emotional data. Your brain was picking up subtle inconsistencies in market behavior.
But here's what I still struggle with. How do you balance these emotional signals with technical analysis?
Shull addresses this specifically. She argues that technical analysis actually works better when combined with emotional awareness.
You mean like when support or resistance feels stronger than usual?
Exactly. Shull introduces the concept of fractal emotion patterns, how our current market feelings are built on layers of past experiences.
This is getting deep. Are we saying our emotional responses today contain information from every trade we've ever made?
That's exactly what Shull's research shows. Every market experience you've had creates an emotional template that your brain uses to evaluate current situations.
So when I'm looking at a chart pattern, I'm not just seeing the technicals, I'm feeling the weight of every similar pattern I've traded before?
Yes, and this is where Shull's work becomes really powerful. She teaches how to create what she calls an emotional edge map.
That sounds complex. Break it down for our viewers.
It starts with identifying your most reliable emotional signals. Think about times when your gut feeling was right. What exactly did that feel like?
For me, it's usually a specific type of tension in my stomach when a trade setup looks too perfect.
Shull actually addresses this exact phenomenon. She calls it the too good to be true detector, a sophisticated pattern recognition system.
But how do we use these feelings without abandoning proper risk management?
This is crucial. Shull emphasizes that emotional awareness enhances risk management rather than replacing it.
Give our viewers a specific technique they can start using today.
Shull recommends starting each trading day with what she calls a context audit. Before you place any trades, check 3 things.
I'm taking notes. What are these three things?
First, your current emotional state. Second, any strong feelings about specific markets or setups. Third, what past experiences might be influencing these feelings.
Let's use the recent tech sector as an example. How would Shull's framework apply?
When the tech sector started showing weakness, many traders felt something was different about the price action, even though the technicals looked normal.
Those who listened to that feeling and reduced exposure saved themselves from significant drawdowns.
Shull addresses a common objection here. Many traders worry that paying attention to emotions will make them too cautious.
I definitely worried about that when I first started applying her methods.
But what she found was the opposite. Awareness actually leads to more confident trading because you trust your decision-making process more.
Speaking of confidence, let's talk about how Shull's framework handles winning streaks and losing streaks.
This is fascinating. She shows how our emotional state during streaks can actually predict when they're about to end.
You mean that overconfident feeling that usually comes right before a string of losses?
Exactly. Shull explains how market dynamics are often driven by collective emotional patterns.
Like when everyone feels a market can't possibly go any higher?
Precisely. She calls these emotional consensus points, times when collective market psychology creates opportunities.
Let's talk about how to integrate this with a trading journal. What specific emotions should traders track?
Shull recommends tracking not just basic emotions like fear and greed, but subtle variations. Anticipatory anxiety versus reactive anxiety, for example.
That level of detail seems crucial. I've noticed different types of fear feel different and mean different things.
This is where Shull's framework becomes predictive. Once you understand your emotional patterns, you can use them as leading indicators.
Give our viewers a specific example of how this works.
When you feel that specific type of calm before a volatile market move, what Shull calls the quiet before the storm, it's often your experience pattern matching with similar past situations.
As we wrap up this deep dive into market mind games, what are the three most important takeaways for our viewers?
First, emotions in trading aren't the enemy. They're sophisticated information processing systems that often work faster than conscious analysis.
Second, learning to decode your emotional responses can give you a significant edge in understanding market dynamics.
And third, integrating emotional awareness with traditional analysis creates a more robust trading approach than either one alone.
Next week, we're diving into another trading psychology classic, Trading in the Zone by Mark Douglas, which pairs perfectly with Shull's insights.
We'll show you how Douglas's concepts of probability thinking complement Shull's framework of emotional intelligence.
If you found value in today's analysis, make sure to hit that subscribe button and notification bell. We've got an incredible lineup of books and research to share.
Drop your questions and experiences in the comments below. We'd love to hear about your own journey with trading psychology.
Until next week, remember, knowledge is power.
But psychology is leverage. See you next time.